Did you know the stock market ended the week with modest gains? Yes, it's true. The major US stock indices, namely the S&P 500, Dow Jones Industrial Average, and Nasdaq Composite, experienced positive returns over the week. However, let's put it into perspective. These gains were relatively small compared to previous weeks. Now, you might be wondering what caused this? Well, it's a bit of a mixed bag. Earlier in the week, the markets witnessed a significant amount of volatility. Yes, we saw some big swings in stock prices. It's been a bit of a roller coaster ride for investors, to say the least. But despite this turbulence, the markets managed to close the week on a positive note. And while these gains may seem modest, they are indeed a positive sign amidst the recent market volatility. The markets have shown resilience, and that's something to be optimistic about. So let's keep an eye on how this unfolds in the days to come. These gains, albeit small, are a positive sign in the midst of recent market volatility. So what led to these modest gains in the market? Let's peel back the layers and dive into the contributing factors. Firstly, the earnings season played a crucial role. Several major companies reported strong earnings, indicating robust corporate profits. This success story doesn't just reflect well on these individual companies. It also fuels confidence across the investment landscape. Remember, when investors see that businesses are thriving, they're more inclined to continue investing, and this helps to boost the market. In addition to strong earnings reports, we also had some positive economic data released. This data suggested a potential slowdown in inflation and a growth in the economy. When the economy is doing well, the stock market often follows suit. So this positive economic data undoubtedly contributed to the market's modest gains. And then there's the overall investor sentiment. Despite the ongoing uncertainties and potential geopolitical tensions, investors seem to be feeling cautiously optimistic. This optimistic sentiment might have spurred some buying activity, which again is great for the stock market. However, it's important to note that these are not the only factors at play. The stock market is a complex beast influenced by myriad factors, many of which are interconnected. But for the week in question, these were some of the key drivers behind the market's performance. These factors combined to drive a cautious optimism in the market, leading to the modest gains we observed. While the gains are a positive sign, what does this mean for the future? We're looking at a market landscape that's likely to be punctuated by volatility. Abrupt shifts in stock prices might become the norm, not the exception in the coming weeks. This volatility is a byproduct of a host of factors: global events, economic data releases, and company-specific news, all of which have the potential to influence stock prices. Now, let's not forget that we're right in the thick of earnings season. Many companies are yet to report their earnings, and their performance could tilt the scales in terms of market direction. A strong earnings report can bolster investor confidence, driving up stock prices, while a weak one can do just the opposite. Lastly, we've got our eyes on the upcoming central bank meetings. These are not your run-of-the-mill humdrum meetings. Decisions on interest rates, which can significantly impact the stock market environment, are on the agenda. Any upward or downward adjustments could send ripples across the market, affecting investor sentiment and stock prices. While these modest gains are promising, it's important to remember that the stock market is subject to change. Always conduct thorough research and consider your risk tolerance before making any investment decisions. Remember, the future is as unpredictable as it is exciting. So stay informed, stay vigilant, and keep an eye on those market trends.